Now, SAP is stepping up its competition with Oracle. The software maker's latest purchase has a $3.4 billion price tag and should expand its reach in the cloud computing market. To talk about this acquisition and more, SAP's co-chief executive officer joins us live from Copenhagen, Jim Hagemann Snabe. Good morning, sir. Thank you very much for joining us today.
Good morning. Good to be here.
Many are talking about the price that you've paid. How do you justify the valuation? You've spent $3.4 billion in cash. It's a 52% premium, but many are saying you've overpaid.
Well, of course, we compare this acquisition with other acquisitions in the cloud space, and it's very similar to what has been going on in the market. On top of that, we feel we're the only company that can bring significant synergies to this deal. We have at SAP, with the installed base, more than 500 million employees out there who need to take care of their talents, and SuccessFactors does that really well.
But you say that this is similar to what's been happening. The premium that you've paid, 54%. Your competitor, Oracle, just picked up a business, a cloud computing business, at a 22% premium. You're also paying 8 times SuccessFactors' forecast revenue for next year, which is way above the average for software targets in North America over the past few years.
No. First of all, the markets have been very volatile over the last weeks and months, as you know better than anyone else. And so it's very difficult to compare the premium. We do look at the multiples, and this multiple is exactly in line with all the on-demand multiples that we've seen in the market. And you compare that with other companies out there in the on-demand space, you will see that we're actually paying the right price.
Now, the price for this $3.5 billion, that is actually the same amount that this market, this entire area, human resource management, what SuccessFactors does, is supposed to make this year. So effectively, in one fell swoop, you've paid for that entire market. You still think this price is worth it?
Yes, first of all, we have to look at what SuccessFactors do. They bring in very simple ways talent management, human resource management to employees everywhere in the world. They've already been successful 10 years in the industry. They are the fastest growing asset in the on-demand business with 15 million users, significantly more than actually the leader. And so you see that SuccessFactors is the leader in their category, and you combine that with the 500 million employees that our customer base represents. We think that this asset is very, very well priced, first of all, and secondly, the opportunity to drive growth and innovation to our customers is tremendous.
Is this just the beginning in your cloud computing strategy? I mean, are you interested in adding capability in customer relationship management, procurement, or expense management, or maybe in other areas?
It's an excellent question, and in fact, that's why we believe this acquisition is the right one. We already have a lot of investments in the cloud. We have all the solutions you just mentioned. We recently launched Sales on Demand, a very next-generation CRM tool for salespeople. We already have expense management. We already have procurement. And we have a whole suite to run mid-sized companies in the cloud. We were missing the HR piece, which I believe is going to be a strategically very important topic in a world where the war for talent is on in a very big way. So this complements our assets, and the combination is the most complementary and powerful combination in the cloud in today's market.
So does that mean you're going to make more acquisitions in cloud computing? Is this just the beginning of similar-sized acquisitions?
Well, we always said, as opposed to competition, that we think our growth needs to come from innovation. And that's organic. We've seen how we have been able to accelerate the pace of innovation at SAP, which is the core of what we do for our clients. And when we acquire to accelerate the future, not to consolidate the past. So we see acquisitions adding top-line growth instead of laying off people, and that's where we are very different to competition. So this one marks another big step. We don't have acquisition as the main driver for growth, but organic innovation, and the combination will allow us to innovate much faster in the HR space.
You've been accused of being behind the curve, behind your competitors when it came to this cloud computing arena. Are you still behind, or does this put you out in front, would you say?
I think this puts us very much in front. In one step, we are now number 2, and as I said, we have the most advanced assets now to broaden the scope. So I feel we are challenging the cloud business as we know it today. We are definitely putting next generation cloud infrastructure, and that's one of the reasons why companies say that we were late. We wanted secure infrastructure for the cloud. We're running mission critical data and processes in the cloud, not toys, and therefore we wanted to do it when we had all of those capabilities, which we have now.
Mission critical. Hagemann Snabe, co-CEO of SAP, they're joining us from Copenhagen. Thanks so much.